This is a podcast produced for EIS Platforms Limited, trading as growthInvest. It is not intended to be a financial promotion of any sort and is intended for financial professionals only. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early stage businesses are high-risk investments, and you are unlikely to be protected if something goes wrong. Don't invest unless you're prepared to lose all your money.
Hello and welcome to Alternative Thinking with Steve Dobson and Melissa Griffiths. This is the podcast that takes a deeper dive into the alternative marketplace and explores topical issues. Today we're delighted to have our guests Iain Baillie, founder and executive chairman of AssetMatch, and Veronika Oswald, commercial director at JP Jenkins. Welcome to you both.
Thank you.
Right, well, as sort of normal, we kick off with a bit of a description of yourself, career to date a little bit, and your companies. So should we start with you, Iain?
Okay. Pleasure to be here. I started in the city 50 odd years ago with a firm of London stockbrokers. I then moved into investment banking and largely in fixed income, but also with some exposure to equities. I ran Market Access, the fixed income trading platform, for 5 years after I left Salomon. And I was one of the founders of AssetMatch 12 years ago. Myself and Stuart Lucas set it up. We perceived a gap in the market for public market equities. And we set AssetMatch up to partially fill that gap, which we've been doing now for 12 years.
Perfect. Okay, brilliant. And Veronika, a bit of a background?
Yes, thank you very much for having me as well. So my background is 20 years in the capital market. I feel like quite a junior, which is quite nice for a change. I work with a lot of young people, so 20 years to them sounds rather extravagant, but I started my career in the city. I was actually part of an RTO, that was a company that was joining the AIM market. So I really learned the ropes and understanding of how companies fare their way through the public markets, what they need to do, how you actually structure things, how you look after your shareholders and investors, how you run your roadshows to attract further investment. And I was part of a biotech company, which is obviously very R&D focused, and that means no heavy revenues, and there's a lot of challenges that comes with that. Working with different brokers, working with different nomads and the usual city participants was a really good learning path for me. Then I moved into a corporate finance that was predominantly in the natural resources. Again, another really useful part of my journey before I moved into the private markets. And then together, me and Malcolm Venn, who's a little bit of a city veteran as well, we were looking at what is actually happening in the US and the whole rise of secondary markets and all these wonderful names that were coming out, like Airbnb, Spotify, Uber.
Really interesting to find out from both of you exactly how they're not exchanges, I know the venues operate, who's using them in terms of the buyers, the sellers, and the companies. Which type of companies are using the two venues? So, Iain, do you mind if you start?
Yeah. So when we acquired a small business called ShareMark, which we bought from the Share Centre.
Yeah.
And it was interesting. When we set out, we had originally planned to have continuous trading, so people would post bids and post offers, and then somebody might hit a bid or lift an offer. ShareMark had a different format, which was they ran auctions. Yep. And the more we thought about it, the more obvious it was that if you have an illiquid asset, it makes a lot more sense to tell the buyers and sellers to turn up at the same time rather than leaving it as a random event. So if Sotheby's are selling an art collection, they have a date for the auction, and everybody knows to turn up and also prepare themselves beforehand for where they want to buy, where they want to sell, what price they're prepared to pay. So we run auctions there. They are some of them are monthly, quarterly, semi-annually, annually. We arrange it to suit the needs of the company and their investor base. And we have an algorithm that computes the closing price. So everybody trades at one price. Okay. So if you were a seller below the closing price, you receive the closing price. And if you're a buyer above, you pay the price. And it's very relevant because you're getting a vast discrepancy in knowledge and sophistication among the participants. So it sort of protects the uninitiated from the experts.
Yeah.
So we've been running auctions now for 12 years. Companies come from 3 distinct camps, really. One are companies that have tried being public, and for various reasons it sort of hasn't worked out.
So that's the sort of delisting.
The sort of delisters, yeah.
Yeah.
And then the third group is potentially family-owned businesses which have been going for hundreds of years. And the share register has grown through the generations. And they probably don't aspire to go public, but they need to have some ongoing liquidity.
Yep.
So those are the 3 groups, really.
And I noticed actually you feel that really for a company to be interesting, they need to have at least a minimum of 100 shareholders to sort of
50 to 100. Yeah, I mean, we always joke that we've never approached JCB, which is the largest private company in the UK, because they've got 1 shareholder and he doesn't need any money. So there's no point in approaching that. So we say 50 to 100, because if you've got 100 shareholders, the likelihood is one's a seller.
Yeah.
Yeah. And Veronika, similar for you?
It is actually very similar to us as well. We actually adopted the continuous trading, which is majority of our clients. And I think the continuous and the auctions do have its own advantages, and we actually run both. We have the auction style and we have the continuous. A lot of the times when we have companies transitioning out of the public markets, it takes them quite a bit of time to start, a little bit of restructuring, and I don't know, Iain, if you find the same, but they feel a little bit bruised and quite, I would say, probably discouraged from a lot of the actions and communication. So it takes them a little bit of time to revive a little bit. And in those situations, we often find that you still have a lot of supporting shareholders or the majority shareholder that would be happy to top up. So in those instances, the continuous works really well, because if you have a buyer and he's ready to execute now, he will go in and he will start scooping up, or the entity will start scooping up from the sellers straight away. Whereby when we find if it's an auction, it can, discourage, or things can change quite heavily in a period of 3 months with everything that's going on in the world. In case of the auction style, we find that works really well when you have that large cap table and when you have companies that are very active in terms of shareholder communication. We run a couple of our issuers do use that trading system, and it works really well because they have a very active audience. They're issuing a lot of information, and we find, yes, that is the right choice for them, but it's really just trying to find the balance and see what works better for them. But very similar in terms of how we approach classifying our clients. So we do put them on in kind of 2 of the categories, and that would be the companies transitioning out of the public markets. And at the moment, we see quite a lot of flow from there because the public markets have been really challenging. And a lot of the smaller companies are really struggling with the liquidity. And we always try and put ourselves in their shoes as well and really have a look at how we can help them, how we can encourage them, and how do we revive that engagement and help them to tell the story. In terms of the private companies, which are also super exciting for us, is really getting them to start almost behaving as a listed companies by way of really guiding them. How do we help them to put in place a little bit of a shareholder communication program, a little bit of a marketing program? How do they start issuing information that is, we work with a couple of partners that we're able to help them with providing an independent research, a little bit of investor relations. We distribute our news through the RNS channel. We've got our own MIC code, which is quite exciting. So we're able to share news through the RNS, and we use Investigate as well, and their newsfeed, which I think, Iain, you also are plugged in.
Yeah.
One thing that, I think from our side for tax efficient, and obviously a lot of EIS, SEIS companies, we would tend to see more sellers potentially in EIS funds and the SES. There's been quite a lack of exits for a lot of the big funds, and the IPOs that we all know are down. I think for us, where we don't have a lack of sellers, but if there is,
how do you find the buyers?
Who is the buyer?
Who are the buyers?
Who are the buyers? I mean, I think that's really what, a marketplace, you need both. And so who do you see coming into the market? We're going to touch on PISCES in another podcast as well. But there's interest in this space now. It's getting exciting. Who do you see coming in to be the natural buyers?
Well, I think that to date, the vast majority of our buyers have been high net worth individuals. We've had occasional institutional involvement, but on the whole, the size of transactions is more suited to high net worth. I think, as you say, we're going to move on to PISCES, because this, I think, is what we all hope will come out of PISCES, is the ability to develop a much broader investor base.
Yeah.
Absolutely. I would echo that. And we also deal broker to broker in a way, so we don't often see who is behind a lot of the orders. But looking at the size of the orders, there is a lot of ultra high net worths or high net worths that would interact in this space. But as I mentioned, especially with the companies that are transitioning and coming off the markets, you do have some significant shareholders that would act as that buy side.
Yeah.
In fact, we've got about 4 stocks where we're actively looking for sellers, which is quite an unusual situation.
Not expected.
Still a problem in a much bargain environment,
Yeah.
because there needs to be more communication out of the companies and a little bit of extra effort put in. But yes, we also see some engagement from family offices as well, which is quite exciting.
We know that in the general asset allocation at the moment, people are moving more into private markets, aren't they? They want to have the slightly less liquid and market exposure. So, yeah, I mean, I think that's very encouraging going forward.
And also, I guess, if you think about the listed markets, where you've got market makers, you've got third-party research houses, almost giving that validation, is that something you're seeing more and more of in this space too? And is that going to help as the private market exchanges grow, or venues, I should say, grow in the future? Because people want that reassurance, don't they, from a third party of, a bit more information about the companies, which I guess is lacking in this space.
It is, and we always try and put ourselves in the shoes of investors. What would you like to see? What information do you use to make your decisions when you're investing into businesses? So we're trying to adopt the same strategies and rules to how we operate our venues as well, because it is that consistent amount of information and being able to make a decision, an educated decision, rather than just use it as a punt, is really important.
Yeah, I think that's absolutely right. And again, and without getting onto PISCES, this will be an obvious consequence of a more or a slightly tighter regulatory regime, that we will have to improve the quality of the information that we present to the buyers and sellers, so they can make informed decisions.
Yeah. And just sort of before we wrap up, just running through the process then for a company or an investor, they need to have, don't they, the shares in Crest. That's something that, and they do need to use a stockbroker to be able to do this?
Sort of 3/4 right.
Okay.
So we run two distinct. We have two distinct products. One is the more popular one, where stocks are all Crest enabled.
Yep.
The orders all come through stockbrokers, and they settle T+2, as if almost as if you were dealing in a public market.
Yep.
We also have what we call a bespoke market, which is for companies that maybe aren't quite ready to completely open up their share register.
Yeah.
And they want to, one of the attractions often for remaining private is that you maintain control of your share register. And so we have a bespoke model which allows us to run the same auction process, but the company can restrict who has access to the information, who has access to the page, and who can put in buy orders and sell orders.
Okay.
So it's not, by definition, it's going to be slightly less liquid than our core product, but it still allows for a degree of flexibility for the companies.
Perfect.
Very exciting. And yes, we actually had a very recent case of working with Euroclear, we have admitted Ingenuity, which was a demerger out of the HUD group.
Yeah.
We actually just announced together with Euroclear the new product that has been launched. We're using an escrow solution to do exactly that. It's the ability to actually control the cap table while still using the CREST facility. So it's a very novel way of how you can transact. It does slow the process a little bit, but you're still able to transact in that safe, secure environment. Probably not as slow. We have a couple of issuers that do use that closed market, but the challenge is the stamp duty takes 6 weeks to come through, and it's a very old-fashioned paper-based system.
Right.
So the escrow solution that has been developed by Euroclear and obviously is CREST and the Ingenuity team. So it's been really lovely to see that the general markets participants have actually came together, pulled together and designed a solution that is really appropriate for a private company, where we can accept the shareholder agreement and we can actually get an agreement from the company before someone enters and leaves the cap table. I think that's going to be something that will be quite interesting for the PISCES launch, and I know we're going to talk about the PISCES later on, but I think that is going to be one of the key elements where we can really have a bit more of a control and really speed up the transactions.
Which actually leaves us nicely to wrap up.
Yeah.
So we're going to have you back on to discuss PISCES, but thank you both for coming, and well, we look forward to the next one. Thank you
very
for
much.
having
Yeah,
us.
thank you.
To hear more, tune in to either YouTube on video or all good podcast channels.
This is a podcast produced for EIS Platforms Limited, trading as growthInvest. It is not intended to be a financial promotion of any sort and is intended for financial professionals only. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early stage businesses are high-risk investments, and you are unlikely to be protected if something goes wrong. Don't invest unless you're prepared to lose all your money.